Welcome back to the Ultimate Trading Podcast for beginner traders, where we help you navigate the complexities of the financial markets, one tip at a time. Today, we're diving into tip 24, industry analysis. Now, you might be wondering, what does industry analysis have to do with trading? Isn't it all about price charts and technical indicators? Well, in reality, successful trading involves much more than just the numbers in front of you. It's about understanding the broader context within which an asset operates, and that context is often defined by the industry the asset belongs to. Industry analysis is the process of examining the economic, competitive, and market factors that influence the performance of an industry and its participants. The goal here is to make informed trading decisions by understanding the dynamics of the industry you're trading in. So, let's break this down and see how industry analysis can enhance your trading strategy. First of all, industry analysis helps you make informed decisions. Imagine you're looking at a stock, but you have no idea how that stock fits into the larger industry picture. You're missing a key element of the puzzle. By understanding the forces at play within the industry, whether it's supply and demand, regulation, or competition, you can anticipate potential opportunities and risks. This helps you avoid blind spots and become a more strategic trader. Now, let's talk about identifying trends. The reality is, markets are often driven by long-term trends. If you can recognize these trends early, whether it's a boom in renewable energy or a shift toward electric vehicles, you can align your trading strategy with these broader market movements. It's like getting on the train before it leaves the station. Understanding industry trends allows you to ride the wave instead of chasing it after it's already passed. Next up, let's discuss the competitive advantage. A deep dive into industry analysis can help you identify which companies are likely to outperform their competitors. What's driving them ahead? Is it innovation? Market share? Operational efficiency? A thorough industry analysis will help you uncover these insights, giving you a clearer picture of which companies have the edge in the marketplace. But it's not just about the opportunities. Industry analysis also helps you identify risks. Every industry has its own set of risks, whether it's changes in government regulations, technological disruptions, or shifts in consumer preferences. Understanding these risks means you can implement strategies to manage them, whether that's adjusting your positions, using stop-loss orders, or diversifying your portfolio. And for those of you thinking long-term, industry analysis is critical for strategic planning. If you're constructing a diversified portfolio and you want to ensure you're not overly exposed to any single sector, industry analysis will help you balance things out. By analyzing multiple industries, you can create a portfolio that stands up to economic shifts and sector-specific downturns. Now, you may be asking, okay, I get why industry analysis is important. But how do I actually do it? Well, let me walk you through the key steps involved. First, you need to define the industry you're analyzing. Let's say you're looking at the electric vehicle (EV) market. To understand the dynamics at play, you need to define the scope. It's not just about the cars themselves but the whole ecosystem, batteries, charging infrastructure, even government policies that impact the industry. Once you've got a clear definition, the next step is to analyze the industry structure. This is where tools like Porter's 5 Forces come in handy. This framework helps you assess factors like competition within the industry, the threat of new entrants, and the bargaining power of suppliers and customers. Let's say you're looking at the EV industry. You'll find that the competition is intense, but so is the demand, with major players like Tesla, NIO, and even traditional automakers like Ford and GM all vying for market share. The third step is to assess market dynamics. That means understanding supply and demand factors. What's driving growth in the industry? For EVs, it's things like government incentives, advancements in battery technology, and shifting consumer preferences towards sustainable transportation. Understanding these dynamics will help you gauge the overall health of the market and predict where it's headed. Then, you need to evaluate the regulatory environment. This is critical, especially for industries like healthcare or energy, where regulations play a huge role. In the EV market, for example, government incentives, stricter emission standards, and policies promoting infrastructure development all create tailwinds for the industry. If you can anticipate regulatory changes, you can position yourself ahead of the curve. Next, you need to identify key players within the industry. This means understanding who the leaders are, but also looking at emerging players or companies that might disrupt the status quo. For example, when you look at the EV industry, Tesla is obviously a major player, but don't overlook emerging companies like NIO, or even traditional automakers that are pivoting to electric mobility. Another important step is to analyze technological trends. In the EV industry, advances in battery technology, like solid-state batteries, could be a game-changer. Understanding these innovations is crucial because they can create new opportunities or disrupt existing business models. Now, you also want to assess economic indicators like GDP growth, interest rates, or oil prices, as they can directly impact an industry's performance. For the EV industry, for instance, lower oil prices might hurt demand for electric vehicles, whereas high gas prices could drive people to buy more EVs. Understanding these factors allows you to anticipate market shifts. Finally, monitor industry news and reports. Stay up to date with developments, innovations, and any emerging trends. Whether it's reading industry publications, following key analysts, or watching government policy changes, keeping a pulse on the news will help you stay ahead of the game. Let me give you a practical example of this in action. Let's say you're like Sophia, a trader interested in the electric vehicle (EV) industry. Sophia believes the transition to electric mobility offers tremendous growth potential. So, she conducts a comprehensive industry analysis to make informed decisions. She begins by defining the industry, focusing on companies involved in manufacturing EVs, producing batteries, and developing charging infrastructure. Then, she uses Porter's 5 forces to analyze the competitive landscape. She realizes the industry is highly competitive, but technological advancements and government incentives give companies like Tesla a strong position in the market. Sophia then assesses supply and demand. She sees that consumer demand for EVs is rising due to environmental concerns, while the supply side is constrained by challenges in scaling up production and developing charging infrastructure. She also looks at regulatory factors. Government incentives and emission standards are favorable, which helps her identify long-term growth opportunities. Next, she evaluates the key players in the market: Tesla, NIO, and traditional automakers. She also monitors technological innovations like solid-state batteries and autonomous driving technologies, which could disrupt the market. Then, she assesses broader economic indicators like GDP growth and oil prices. Realizing that lower oil prices could affect demand for EVs in the short term but sees long-term potential driven by the push for sustainability. After gathering all this data, Sophia is able to identify key trends and companies to focus on. She uses this information to build her trading strategy and make informed investment decisions in the EV sector. The key takeaway here is that industry analysis gives you the context you need to make informed trading decisions. By understanding the dynamics of the industry, you can identify trends, manage risks, and increase your chances of success. It's about seeing the bigger picture and aligning your trades with the forces shaping the market. So, let me ask you, how do you approach industry analysis in your own trading? Have you ever used industry trends to make a trading decision? I'd love to hear your thoughts, so drop a comment below and share your experiences with us. That's all for today's episode of the Ultimate Trading Podcast for beginner traders. Remember, it's not just about the numbers on the screen. Understanding the industry context behind the asset is just as important. Embrace the power of industry analysis and use it to gain a competitive edge in your trading journey. Thanks for tuning in, and until next time, happy trading.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, Don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.